Welcome to the Trusted Podcast with your host, Blake Johnson. In each episode, Blake interviews professionals in different areas of life that you need a trusted source of information, including trust and estate planning. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Now, here's the host of Trusted Podcast, Blake Johnson.
Hello and welcome to the Trusted Podcast, everybody. Great to be with you again. Today we are going to be talking about mortgages. So got my good friend Sheldon Worthington here. Sheldon, thanks for joining us.
Yeah, you're welcome. Anytime.
Okay. Well, give us a little bit of background. What makes you qualified to talk about mortgages and just a little bit of your journey?
Okay. So I guess I could talk about how I got in real estate. I was going to Salt Lake Community College, which a lot of people have been to Slick. My dad told me to quit buying cars because they traditionally depreciate unless COVID hits, right? And to get in real estate, buy a home. So didn't know what house hacking was. Bought my first home while I was in college. It was really nice. My roommates paid my mortgage. So I went through school debt free. Had no rent when I was going through college because my mortgage was paid, and it ended up where my house doubled in value by the time I graduated. So the light bulb went off about real estate. It just was really appealing to me. And so for the last 22 years, I've done the flipping, developing, I've had rental properties. But it was about 14 years ago that I got into lending. Went and got my master's in real estate and finance up at the University of Utah, and kind of found a need for builders, realtors, and buyers of a lender that knows what speaks the same language. So it's ended up being a really good career. And for the last 6 years, I've been teaching free classes on how to build wealth through real estate, as well as just home buyer classes each month. So it's been a very rewarding 22 years. I feel like I've seen it all pretty much.
Awesome. Well, before we get into the details of that, tell us something interesting about yourself, what you like to do outside of work, or something that most people wouldn't expect to know about you.
What they wouldn't know. So I grew up playing sports, right? I think most people played sports, but I actually got into breakdancing when I was younger and used to do a lot of breakdancing and started losing my hair from the head spin. And so I got into country dancing because of that. And loved it. It was, we just had a good time. We were in college days. So I did country dancing and swing dancing, performed with Salt Lake Community College Dance Company. My wife and I met that way. So we love dancing. We love sports. We love being outdoors. It's just, we have a good time with that.
Okay. Awesome. Definitely unexpected. I did not know that about you. So
yeah,
I love that question. It's one of my favorite ones.
Yeah. Dancing is a good time. Right now I have my knee surgery and back surgery. So I'm down for a little bit, but I'll be up again, So next year.
So you talked a little bit about, your journey. Give us a little bit more of the why you do what you do. I know that you have a big why of why you do the lending side and what you can do with that.
Yeah. So it's interesting. So the real estate side, I've seen my life change, and why I teach my free classes, because it's really impacted my family, my kids, my wife, and our goals and dreams on building wealth through real estate. But lending, it was about 2000, I would say 8-ish. The market was rough. We were doing a lot of construction in real estate, and we had a property in West Valley. My dad and I had bought that rental together, and our family business, we were making about $40,000 a month between our business with my dad and I, and it was good. Well, when the market turned, we were making about $10,000 a month, which, back then actually was actually very good because there was just nothing there at that time. But we had about $15,000 of expenses between our personal homes and our business. So when you go from 40 to 10, that's a big swing. And it was tight. It was really hard. Well, we had this West Valley rental paid off, and if we could get a mortgage on it, it would actually have paid off our business and a lot of bills, and it would flip us from having to pay out $15,000 to $5,000. So we go from negative $5,000 positive $5,000. And I had talked to multiple lenders, and it just I got no twice, and it was really frustrating. I'm like, this should work. This got to work. So the third lender, literally, I explained it to him, and he's like, oh yeah, you could do that. That's not a problem. And so we were able to make it work, and it literally saved our family business. It was only a $75,000 loan. It wasn't much, but it just literally changed everything for our finances. And so I always tell people, it doesn't matter if it's $100,000 loan or $1 million, it matters. It means the same thing to both people. And our family business was saved by that third lender that was willing to go the extra mile. And so I in a good and bad way, I take it personal. I care because I've been on the receiving end of it. So that would be my why, but I still hadn't got into lending at that point. This loan officer said, you should be a lender. And I'm like, that's not me. And then fast forward years later, that's what I'm doing. I've been doing it for a long time. So love what I do. I'm very grateful. And I take it very personal. Each transaction matters.
Yeah. And I can definitely vouch for that. Got a multitude of stories of people that couldn't get financing anywhere else. And Sheldon was able to make it happen. So I think that's a key thing. When you're looking for a lending officer, is someone who's actually going to take the time to hear your situation and try to go through every possible scenario there to make sure it can happen. Okay, let's talk about biggest myths or misunderstandings in mortgage lending. What do you hear a lot of that people are just wrong about?
Yeah, so it's interesting. I always look at people. So in my classes, I talk about interest rates, right? Like we always fixate on rates, and I always say, well, I can sell you on a 15-year at the lower rate. I can sell you on higher cost. A lot of lenders will go in and just try to find out what sells you or close you, and go and just kind of focus on that. Where for me, I like to give all options. Maybe the higher rate's better or the higher payment's better because you want to save money to go buy another property or to furnish the house or have savings. Maybe you don't want to go all in and put 20% down just to have no mortgage insurance or no monthly mortgage insurance, to clarify. But there's strategies that most people don't really analyze to a depth that really can impact your finances going forward for years to come. So for me, if I always ask, like, are you going to buy other properties? And they're like, yeah. I'm like, well, maybe you shouldn't put as much down. Already have a nest egg for the next one. Stay in this house for a couple of years and then go buy another one with a small down payment as a primary residence. And people just love the options, right? I just give them options and let them choose. We're not here to pressure them. We don't sell them. My approach is always education, 100% education, because you'll refer people to me, right? If you feel good about your decisions and you have the control to choose, that's the closure that you're going to get. So I would say number one is myth of, I got to put a bunch of money down. A lot of lenders say, oh, well, you got to put money down. I worked at a bank when I first started. Our portfolio was about 4 or 5 products. And so if you didn't fit in that, it was hard. We have 700 products at Guild Mortgage. We have a lot of options. And so people go get pre-approved and they say, I just didn't work. And I'm like, hey, did you talk to another person? And they say, well, no, I've already talked to somebody. There are different products and also different risks. And so I always tell people, I'm gonna do everything I can. If I can't get it done, it's not going to happen. But there's a myth of just thinking everybody's the same. That's not the case. Whether it's pricing, somebody set you up on pricing, maybe that's not the best idea. Maybe a strategy. Again, products wise, I had a buyer that was referred to me from a title company, and the broker tried to get them into a home, and at the last minute, they were not using what's called ADU income, accessory dwelling unit income. So they didn't qualify anymore. Their earnest money already went hard. And I said, well, that's not a Fannie Freddie guideline that you have to have it permitted in a business license. That's kind of going overboard. So they switched over. We closed it within 8 days and got it done. Well, she said, well, how come they couldn't do it? And I said, well, not every lender's built the same. We know that. Some of them don't have the right products, because I worked at a bank and I've experienced that. Some of them don't know how to understand them, or the underwriter, maybe they speak a different language. We've been with our underwriter for 14 years. So Kyle and I are just on the same page. I know what he needs. Or sometimes it's a hard loan. And to be honest, some lenders are just, I'm going to deny it because I can go get 2 or 3 of the loans in that same amount of time. I get that. But for me, I had somebody that went the extra mile when, in 2008. I'm going to fight tooth and nail because you're going to refer everybody to me. It's worth it in the long run. So
yeah, we have a mutual friend who's always saying, do the right thing and the money will follow. And, I definitely agree with that. It's interesting you bring up the strategy standpoint. I recently bought a new car, and the guy was like, why are you doing a 4-year loan instead of a 5-year one? The rate's the same. And I'm like, I want to pay it off faster. Like, I can afford that monthly payment. It's a strategy also from a business standpoint of paying it off. So it's like, yeah, I'm going to do that. And he just couldn't wrap his head around there. It's like, no, you always go the longest period of time, the lowest interest rate, all that stuff. And, sometimes that works, sometimes it doesn't. And so knowing the difference between that and having somebody who's going to explain that to you is definitely huge.
you kind of hit on the head, is everybody's different, right? Like every situation is different, and also everybody's goals is different. So I share what they can do, and then I hear them to say, what do you want though? And they'll talk about pros and cons, and then we'll go in the direction that they want to go,
Yeah, for sure. It's just it's refreshing to talk to someone who knows and wants to do those things. As you said, yeah, you can go close 2-3 more deals, but at the end of the day, like, you and I are in the business of helping people. That's what we want to do. That's why we got into what we do. And so, how can we help as many people as possible? Sometimes they're more difficult, but they're also the most rewarding at the same time.
For sure. Yeah.
Okay. Where any major changes happening in your industry in the coming year or two? And then follow up to that is, where do you think there needs to be change within your industry?
So I would say, I'll say what has been changing and what is changing. Let's talk, well, kind of a timeline a little bit. So interesting is, we all know rates and payments are higher. That's a given. And because of that, it's a really good buyer's market, to be honest. When I ask people, if you want to buy an option A market or option B market, which would you choose? Option A is you're going to pay $20,000 above appraisal out of your pocket. You're going to pay your own closing costs because the seller's not willing to do it. You're going to look at 10 homes, half you don't like, but you're desperate. You buy one you don't like. No way down buyer, good luck. You're bid out by everybody else, but the rate and payment's lower. Okay, that's option A. Option B is you don't have to pay $20,000 above appraisal. You don't have to pay your own closing costs. A lot of times you get sellers to pay it. Look at 10 homes, pick and choose what you want. No money down buyer, you finally can get something. The disadvantage though is your rate and payment's higher. As rates drop, you refinance, which you do. And in my 8 months of my class recently, I've been teaching this class 6 months, I've never had somebody say, I want option A. It's always option B. We know rates and payments are high, but it's created this other opportunity of these other benefits that we didn't have in a seller's market. We are in a buyer's market, and it's been really good for our buyers to take advantage of it. My really savvy buyers are buying right now, and then we'll refinance because they see that. Now the challenge is just getting them qualified. Some people, right? So we look at co-signers, we look at buying with multiple people on the mortgage. We look at accessory dwelling units, house hacking, just different options. And that's a big change, I think, because of affordability, right? But what I also say is, if you can't afford to buy an option B, how the heck you can afford to buy an option A? Because when rates drop, we could go back to A. So that could be a big problem. So I definitely see our issue of 10 years of lack of our supply and demand issues, that we haven't been bringing product online, new build and existing homes, for how many household formations have been created. That's people that moving out of mom and dad's, graduating college, getting married or whatever, that have just been sitting. I mean, literally the numbers as far as like age 27 to 43, only 33% of them owns homes. So crazy. 27 to 43. And a lot of them are first-time home buyers. My feelings are it's because they saw the crash. And so there's some PTSD from that. They saw their parents or older siblings or experienced themselves. And then they saw rates at 2 and 3%. So we have trauma from that too, where it's like, I don't know. And it's this waiting game. Well, as rates drop, it's just going to be a frenzy. That's my biggest concern. I hope I'm wrong on it, but there's just data to back it up, that I hope rates slowly come down, not drastically come down, because it could be a frenzy back on option A as a seller's market. So that's kind of a market update. As far as the industry as loan officers, 2 Decembers ago, we had 40% of loan officers not renew their license. This year was another 20. Okay.
Wow.
Of the remaining, half are over 50 years old. So I feel like in our industry, if I'm telling my boys, my daughter, my kids saying, hey, you should maybe look at this, I think there's a huge opportunity long term. But we'll see if those, previous loan officers jump back in when it's easy. Well, I don't know. We'll see what happens. But that has definitely been a shift. Transactions as a whole are down, but the loan officers and realtors that are still in are getting more what's called market share. We're picking up the more of the pie, which the growth is going to be trajectory better for us.
Yeah, it's always interesting how any type of business, when it's a down market, you find out who the real the A players are, because they're not affected by the economy slowing down or whatever it is. And so sometimes that's when you can more easily find out who is the right person to work with, because they've weathered that storm. Or maybe the other thing is you look at, hey, were you around? Were you doing this however many years ago? Did you do it? Did you survive this up and down? Did you, whatever? And then you can see how good they really are. Or if they were just, hey, I jumped on the bandwagon and then I rode it for a bit and then I jumped off.
Sure.
You want someone who can weather those storms. And, we had, I've dealt with realtors before, and in Nevada, I think there's like 18,000 realtors, but only 10,000 homes were sold in the Las Vegas area. And it's like,
crazy.
Okay, so they're doing less than half a transaction a year. They don't know what they're doing. But then you have people doing 40, 50 transactions a year. So you want to find those people who actually know what they're doing and have the frequency to be up to date on it.
Yeah, we would say, 10% of the business is done by 90%, vice versa, right? That's that number. But yeah, I look at the market and I say, if we can weather the storm, you want to trust that person because they can kind of be an advocate for you. Is this a good investment? And they're like, well, I've been able to weather the storm. And we have a lot of loan officers in our industry that when things are good, they're out buying the boats and the nice cars. And there's nothing wrong with that. I'm not saying not to live life, right? But I probably overdid it by buying more rental properties and investing more money. And my wife's like, oh man, maybe we should buy this. And I go, but that's why we're still in the industry. That's why we're still here, and so she gets it, she trusts me, and it's been very rewarding, and also be an example to other people. It can work. When things are hard, welcome to life. I mean, raising kids, marriage, just your health, things happen in life. And it's like, you weather the storm. That's when you literally learn people's true character. That's who they are. I feel like when things are hard, not when they're easy. When they're easy, you can smile and everybody's happy, but it's when you're tested, that's when you really find people's true character.
Yeah. And that's also where all the growth happens. People are fine with the analogy for lifting weights. Yeah, I know I need more resistance. I need to push more weight and make it hard, but we don't want to do that on our personal level. We don't want to ask for hard times in our business or in our personal lives, but that's where all the growth happens. And the people who have gone through more of those situations have more experience, have more compassion usually, and they can help you with going through that yourself.
Yeah, I agree 100%.
All right. What are some things people should do before looking to buy a home, and specifically before coming to talk to someone like you? What are the steps they should need to take to make sure they're ready for that conversation?
Yeah, it's interesting because I talk to people in their 40s. I've talked to people that bought homes before they come to my class, and they had no idea there are these other options, right? They went through with the lender, and they're like, I don't even know what loan program I did and why. They didn't know there was other options. And so this same comment would be for somebody who's never bought a home or bought 3 homes. It's just get educated. Like, I don't even care if you're buying a home in 5 years. I literally have people come to my class, some are like 17 years old, like juniors and seniors in high school, that are just savvy and they want to just learn, because they're like, I don't even know the language. I don't even know what to ask. Tell me about credit. Tell me what kind of job history, or how do I, maybe I need to look at how I do my taxes on my self-employed income. And so I always just say, get educated, because you're going to have things that factor qualifying. So your credit, it's going to be your income. We have no money down options. You want to put money down, you may not. There's different options there. So those are things you don't want to look at. Credit, we do have no credit score options. So I can't, we do have no credit score options, but yours, you're going to look at credit, equity, down payment or no money down, and income. And that's going to be based on what you make, what your expenses are, different things there. So that's a very generic answer, but I would say, talk to me now. Like, even if you're thinking 5 years from now, I'm somebody that, I've been teaching my class for 6 years. I've been doing this a long time. I've been fortunate enough to have my master's degree in it. I go to other classes. just to see a different perspective. I always feel like I always like learning or just seeing different ways of looking at things because it keeps you on top of your game. But that's even when people looking to buy. Come to as many classes as you can. I'm closing on my niece and nephew's home tomorrow, and they're late 20s, and they're buying their third home. They've been in my classes for 5 years. They didn't know where to start. Again, they didn't even know what questions to ask sometimes. It's like, well, I didn't even know to ask that question. But definitely, we're going to look at your income, your credit, and down payment or no money down. And so you want to focus on those areas to just be very, very basic. But then we're going to look at strategies. We're going to look at maybe you don't qualify, you need to make this much money, go get that job. And we can help somebody qualify with a job offer on some programs. So just because they haven't been the same job 2 years, which is another myth, they think I got to be at the same job 2 years. That's not the case for a lot of programs. Just reach out to me right away and we'll strategize. And even if you're having an issue with another lender that's not getting close, call me and I'll tell you how to close it with them. I'll say, hey, they should understand the guideline this way. Go ahead and get it closed. The one transaction is one thing, but it's the relationship. We just talked about it many times. You're going to refer everybody to me. That's okay. It's rewarding. I've experienced it myself.
Yeah. So just relaying back what I heard there was, one, you're not too early to start. Like, get on it, have the conversations, what things you should be doing or can do to get ready to qualify when that time comes. But two, like there are options out there. If you think you can't afford a home, that's not necessarily true. There are ways to qualify, ways to make it happen. So, talk with someone like Sheldon and see what's out there. You don't know if you don't ask. And so
absolutely
have that.
So I'll give you a couple examples if you don't mind. So
sure.
I have my son, he's going to be engaged this next year and he's living in my Orem rental and I have a lease with him. And then he's collecting the rent from his roommates and paying me. Well, after a year of doing this, he can use his job income plus this rental income to qualify for his own home. So I've strategically planned it that way and put him in place to capture that rental income instead of all of his roommates paying me directly. They're paying him and then he's paying me. That's called boarding income. That's one strategy that if he came to me a year later and said, all right, I'm going to buy a house now. What do I have to do? I'm like, well, you got to do this for a year. So the sooner somebody can come in, the better. I had another gentleman. He worked at In-N-Out Burger in Utah County, came to my class, makes $15 an hour and loved it and was like, I want to buy a house, right? He's just like, let's go. This younger generation, they're hungry. I said that 27 to 43, what is that? Gen X, right? The millennials. I think I'm a millennial by like 3 months.
Yeah.
I don't know if I identify as a millennial because it makes me a millennial, but then if I don't, I'm older. So I'm like in that 3-month phase.
Yeah.
But the millennials, I told you about the trauma there, right?
Yeah.
Well, then you have, I think, is it Gen Z below them?
Yep. Gen Z.
Okay. So Gen Z, they just come in and say, what do I have to do? Like, they're like, let's go. And anyway, this guy in Burger, he came to me. I won't say his name. Great kid, going to UVU. And he's like, I want to buy a house, but there's no way. I make $15 an hour. Right. So he brought his dad to my next class, the first class in Lehigh, my second was in Draper. His dad comes, loves it, and was like, man, we want to build wealth in real estate, but I don't even know how to do it. Like we don't have any family history of it. We're not educated. We don't speak the language. And I said to him, well, what do you make? He goes, I make $200,000 a year. I'm like, well, what's your mortgage payment? He's all $900 a month. I'm like, what's your other bills? He goes, I don't have any. I'm like, why are you not buying properties? He had no idea that he's been sitting and he could do it. Well, we were able to get him on the path to set up a home equity line of credit, pull money from his house and put 5% down to help his son buy a home. His son was able to move in and rent out the rooms like I did and cover his whole mortgage payment. Okay. Dad was able to go in with him as an investor, as a partner for 5% down on what he looked at as an investment property. His son was able to buy a home with no money down because dad did it and is rent free in college, even in a high rate market right now. They are loving life. So they're referring everybody. So it's just don't count yourself out. Like, let's sit down and see what we can do.
Okay. Love it. Yeah. Love the stories. That's so cool. I love hearing from people, doing different things, helping other people get to the next level. Like the rising tide lifts all boats. It's all going to help us out. So appreciate you sharing that wisdom, sharing those stories. Always like to end with, what best advice did you ever get? And then what's the best advice you could give to the average consumer?
Best advice in life or is in work?
Anything.
What people always say, like, what's easy now, the easy choices now will make it hard later, and vice versa, right? So I've lived that way with my business, my life, my marriage, my kids, as I work really hard to have that life later, right? Like, so I would say I push off more pleasure of life to have that later. I can enjoy that at some point, which is a good philosophy. I grew up around that attitude. My wife's dad passed away at 50 from a heart attack on her birthday, which was actually yesterday, the anniversary of that. And my wife said my dad would never have been able to get to retirement because he died. So that philosophy works really well with, saving for retirement, investing and all that. And I'm a big believer in that. And that's how I live my life. But she really brought me into, you got to enjoy every day as well. So we've been able to have this happy medium. And my Taylorsville house, the first one I bought when I was in college, my house payment was $750 at one point. I'm like, I'm going to pay this thing off and we're going to be set for retirement. I'm going to take care of my kids. And my wife said to me, our kids don't care if we don't have a mortgage. They just care about their friends and their schools and their neighborhood and their life, their experiences every day. And it really changed the way. I'm a big numbers guy. I'm a big on investing, but there's a lifestyle too that I always want to honor and respect too, because time goes every day. We don't know when it's our last day. So I would say, try to marry those two together. Work hard. Don't live in just today only, but also don't miss out on today in your personal and work life.
Okay. Awesome. Great words to end on. Well, thanks again, Sheldon, for coming on. For those of you listening, hopefully that gives you some hope about buying a house or investing in real estate and what you can do there. Really look for someone who's been in the industry who can help you and is willing to put in that work to find the situation that works best for you. That's all we've got time for today. So until next time, guys, we'll see you later.
You've been listening in to the Trusted Podcast with your host, Blake Johnson. You can find this show on all the major platforms, including YouTube, LinkedIn, Facebook, Apple Podcasts, Spotify, and on our website, trustedepa.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others. Please subscribe to make sure you are notified each time a new episode is released each week.